Ladies and gentlemen, welcome back to the channel. Here in today's episode, we are going to be talking about Tesla stock this week. Tesla is about to move big. Now, there's a lot of catalysts this week. Did you know we're going to be getting the CPI report on Friday? Yes, the government is shut down, but they are still releasing that because they are going to be doing the annual adjustment for the cost of living for Social Security. So that's the reason they say they're putting out the CPI report. I am under the assumption that that's probably going to be a good CPI report. I don't think Trump would want the CPI report released as really the only data set we've got from the BLS since the government shutdown, unless it was going to show good things. Now, could I be wrong? Could it be a bad CPI report? Obviously, it could be. But to me, that would seem unlikely. Okay. Now, we're going to talk about my expectations for Tesla. If you've watched any of the prior videos that have been put out over this weekend, you know that Tesla looks good. A breakout looks likely from here, in my personal opinion, and that is something we must get into because I think a lot of people are bearish right now. In fact, we know a lot of people are bearish right now. Sentiment is really not great. Positioning is just not great. And, I think a reversal could be coming. And Tesla with earnings is a prime ripe catalyst for just that. After all, Tesla had blowout delivery numbers a little over a week ago, and the stock sold off on that. It was a buy the rumor, sell the news kind of situation. Well, those sellers are gone. You really could have a runway here for buyers to step in a big way. And that could really start and take off this week. It could lead to new all-time highs by even Friday. That's the kind of rally we're talking about here. So we have a lot of work to get into in today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video if you want to come trade with us. Now, what we're doing, long story short, let me give you a little bit of an example. In a company like Nvidia, you're never going to uncover information that Wall Street does not already know. The stock is very well covered. It's a very well understood business, okay? But take an AI company that's $1 billion market cap that doesn't really have the same kind of analyst coverage or whatnot. In those areas, smaller cap companies, there are opportunities that Wall Street just outright ignores. And there's a lot of those in AI, in energy, in AI software, robotics, biopharmas, gene editing, okay? That's really where the opportunity is presented. These are themes that are going to be with us for 10 plus years that are not going away anytime soon. And we are identifying those opportunities, taking decisive investments in those opportunities. Okay, long story short, that's what we are doing in the trading community, and that's how we've been able to excel, okay? That portfolio is up about 145% year to date. At one point, it was up 220% year to date. I think by the end of the year, if I'm correct on the rally I think could be coming for not just Tesla, but the broader markets, that portfolio could be up well over 300% year to date. And there are more and more opportunities we are uncovering almost on a daily basis that are very exciting. So if you guys would like to join that, check the link out down below in the description of today's episode. And let's get into why I'm bullish on Tesla stock. Now, this might be obvious because we've talked about it so much, but this week's earnings don't matter nearly as much as a lot of people think. Okay, now sure, margins and EPS and profitability and all of that, Wall Street cares about to a certain extent. But with Tesla, it's really about the conference call. And there's no reason I am seeing where we're going to have bad news on the conference call. Where Elon and the, other high-ranking individuals at Tesla are going to give us bad news. We're getting almost daily videos and pictures now of the Cybercab doing more testing around Giga Texas, even in Fremont. It looks almost inevitable that the Cybercab production could be starting soon, which means we're getting really close to unsupervised FSD and unsupervised robotaxi trips or rides. I think that in and of itself is a big catalyst. There's no reason for me to expect that we're not going to have some kind of piloted Optimus production and sales at some point next year. Okay, those are the two big things that matter for Tesla. But I also think we could be in store for a little bit of kind of guidance raise, if you will, from Tesla from a delivery perspective. I've long been under the narrative that Q4 is also going to be a strong quarter. You know, a lot of Wall Street thought that Q3 was just going to be the strong quarter and Q4 was going to be bad. I don't buy that, okay? I don't buy that narrative that, you know, we're just going to see a drop-off in deliveries for Q4. If anything, you're now seeing wait times in China pushing into December, okay? So there's a lot of demand in China, and I think demand in the US is probably going to be better than expected. Q4 is normally Tesla's strongest quarter organically, and I think there's some strength there underlying in the Tesla business. Now, obviously, that matters a lot less. What is more important is AI, robotics, robotaxi, okay? And those are the things that are really going to move Tesla from this point following earnings, okay, specifically. Now, we do have big catalysts coming on November 6th with Elon's compensation package, which looks almost certainly going to be approved. That would be a real black swan event and a huge downside risk for the stock if it is not approved. I just want to point that out because, again, it's a big risk if for whatever reason, you know, Elon's comp package was not approved. But it seems highly unlikely that that is going to happen. Now, Tesla is going to make an investment into XAI on November 6th. And we're also probably going to get new information on Tesla, maybe an Optimus demonstration. You know, there's going to be other things that happen November 6th that could also be material catalyst for Tesla stock. We also have what I believe will be at least one more city where robotaxi operations will be starting. Okay, robotaxi has been really quiet now for the last couple of weeks. We haven't gotten any updates really. And I think something is cooking for robotaxi. So that could be exciting. Obviously, we will have to, you know, see what happens with that. And only time will tell over the next 3 months. But when I look really at broader 2026, you know, even though the markets have gotten fearful and people are bearish, and we'll look at that in just a moment, as well as the other catalyst and data for this week, don't worry. 2026, the bull thesis remains intact, okay? Like, nothing has changed. Literally nothing has changed from a month or two ago versus today, right? I'm expecting inflation to come down. I'm expecting the consumer and economy to improve. Big, beautiful bill, no tax and tips, no tax and overtime, changes in the tax code, okay, among maybe many others. Just inflation coming down in general should help boost the economy and consumer economy. Not to mention real estate. Real estate can start to, you know, move again. People can start to buy and sell homes. That's a lot of money that people are going to take to their bank accounts and be willing to spend. AI is alive and well. We have an AI Cold War. The bubble has not popped. Like, we're at the very, very early innings of what you would call a quote-unquote AI bubble. Like, robotics, once that starts to get real, you know, bubbly, then we'll talk about a bubble, right? You haven't even gotten to robotics or healthcare AI euphoria or autonomous euphoria and like tractors, right? So I think there's still quite a long way to go before we're looking at any kind of real bubble, quote unquote, within AI. And I think with just the way the markets are right now, how bearish Wall Street is, even in the short term here, there's likely going to be some upside. Now, this blue line, the 20-day moving average, I've pointed this out multiple times now, but Tesla stock closed above the 20-day moving average. Every other time that has happened in the past, it leads to a very strong rally, right? It doesn't seem to happen for no reason. The kicker is it's usually not as soon as you break above the 20-day moving average. Like, it's usually not you break above the 20-day moving average and boom, you triple, right? That's not what I'm talking about. Like, normally you'll break above the 20-day moving average. You consolidated here 1, 2, 3, 4, 5, 6, 7, 8 days before you really started to break out. Back here, you broke the 20-day moving average. You went up for 2 days, very strong. You fell for 1, 2, 3, 4, 5, 6 days, really like 7 days, found support at the 20-day moving average, and then you started to rally. That was after the election rally. Back here, you kind of broke above the 20-day moving average, came down a little bit, found resistance, came down a little bit more, broke above, a couple days later, consolidated, then boom, you had the larger rally. Most recently, you broke above the 20-day moving average, kind of pretty volatile. You'd go up, you'd come down, you'd go up, you'd come down, but then you finally broke out above again, and then you consolidated for 1, 2, 3, 4 days. Then you got the larger rally. So it's not to say tomorrow the rally necessarily starts to 500, but it's a good sign that over the next couple of weeks, you should be seeing a rally in Tesla. Like, I would be shocked if we don't. Now, again, as I said in some of the prior videos as well, the markets are just bearish right now. People are bearish. Sentiment is bearish. Even like positioning is starting to get bearish. The CNN Fear and Greed Index is coming in at 27 in the low side of fear. Market momentum is fear. Stock price strength is neutral. Stock price breadth, extreme fear. Put and call options fear. Market volatility is fear. Safe haven demand in extreme fear. And junk bond demand in extreme fear. The AI Investor Sentiment Survey shadows similar conclusions. Bullish investors at 33.7%, neutral investors at 20.3%, and bearish investors at 46.1%. People are just bearish. Wall Street is just bearish right now. And historically, when Wall Street is bearish, you want to be a buyer, okay? It pays to be a buyer when Wall Street is bearish. The percent of stocks trading above their 50-day moving average hit a high of 74% in early June. It's down to 42.1% today. So that just means like 60% of this market has been in an active downtrend for the last couple of weeks at least. So yeah, could it get worse from here? It could, right? But you're already so washed out from a sentiment perspective. People are already so bearish. The markets are grappling with a lot right now. Bad regional bank loans, China-U.S. trade tensions, and a government shutdown. Like, it could get worse from here, but it seems like things could be about to get better as well. Okay? We were a little overdue for maybe a corrective phase, maybe some consolidation, and now we have gotten just that. Okay, now that that is out of the way, let's quickly run through earnings. Okay, so earnings this week, you're going to get regional banks Monday, really, okay? HBT Financial, Zions Bank Corp, that was one of the big banks that, really hurt things. Cadence Bank, Service First Bank, okay, and likely some other smaller ones. And, we're going to see how bad is the loans, right? Zions was one of the banks that reported they had like 50 billion or something like that in bad loans. Something like that. I don't know the exact numbers off the top of my head, but Zions was one of the banks that really got hit in this last week, and that's what also caused a lot of the pain and carnage for the areas that we are targeting: AI, robotics, quantum, some of the longer duration growth areas. Because if you have another regional bank crisis that drags us into a recession, you don't want to own those high-flying stocks. You want to own the Apples, the Googles, the Amazons, right? That's the perspective, at least on Wall Street, okay? So those are the stocks that get sold off first, okay? So that's basically Monday. Cleveland Cliffs, they're going to tell us a little bit more about the economy as well. That's going to be important considering we're not getting a lot of economic data. Now, Tuesday pre-market, Coca-Cola reports, pretty stable company. GE, Elevance Health, Lockheed Martin, Philip Morris International, RTX, 3M, Pulte Group, GM, and Northrop Grumman. And then Tuesday and after hours, Netflix, Intuitive Surgical, Texas Instruments, Capital One, Mattel, East West Bank, Omnicom, and some others. Obviously, Netflix is going to be a big one to move markets. There was actually in the last 3 months or so, I don't remember exactly why it was, but people started to cancel Netflix. Maybe if you guys can let me know down below in the comment section. So that one could actually, it's a little bit of a wild card from my perspective. Like, how much did that catch on? Did they actually lose subscribers? I don't believe Netflix will actually be updating subscribers anymore. They're trying to focus on other metrics. Okay, so keep that in mind. But Capital One will be a big one to watch as well. Again, people spending, since the government is shut down, is in focus. Now, Wednesday, Amphenol, GE Veranova, Vertiv, Boston Scientific, Hilton, AT&T, Tech, Thermo Fisher, and Winnebago. Wednesday and after hours, Tesla, obviously a big one, IBM, Kinder Morgan, QuantumScape, Century Communities, Texas Capital Bank, SAP, Alcoa, Lam Research, and some others. So still even more banks, some AI names, some data center-like names like Vertiv, IBM, and then obviously Tesla, very important one there. Thursday, American Airlines, Honeywell, Dow, Hasbro, Nokia, Southwest, AutoNation, T-Mobile, and pre-market. Thursday and after hours, you have Intel, Newmont, Alaska Airlines, Deckers, Boyd, Ford, and some others. And then Friday pre-market, PNG, some healthcare names, and maybe some banks thrown in there. So big earnings off the top this week: Intel, Tesla, IBM, Netflix. Okay. Those are your biggest earnings. But Capital One's going to be very important for the for a read on the economy. Hilton, surprisingly, could be important for an early read on the economy. Vertiv for the data center space. So there's actually quite a few industries specifically that will be telling us a little bit more about maybe how the economy is doing, how those separate industries are doing. And that's going to be a big theme of this upcoming week, as we are now getting into earnings. Now, expectations are high for earnings, but banks really delivered last week, and I don't think there's any real reason to expect earnings are not going to come in good again. Now, for your economic data, starting off on Monday, CB leading index month over month will be coming out. A 3-month and 6-month bond auction, net long-term TIC flows, foreign bond investment, okay? So we should be getting some of these numbers, overall net capital flows, on Monday, but no real big catalyst. On Tuesday, you have Fed Waller that will speak at 9 o'clock in the morning, and then again at 3:30 p.m. Some oil stock numbers, but nothing too important. On Wednesday, you have, again, nothing too important. Some mortgage data. We should be getting some more energy data. We do have a 20-year bond auction at 1 p.m., and the rate on this should come down a lot. The last yield you had was 4.613%. So, yeah, 10-year Treasury yields are below 4% at the time of recording this video. So that should be coming down quite a bit. Now, on Thursday, existing home sales for September should be coming out. Kansas Fed Composite Index, Manufacturing Index as well. Some shorter-term bond auctions. We should have got initial jobless claims, but we have not got that so far. And now that the government is shutting down, look how many initial jobless claims reports are starting to stack up. You're looking at, what, 1, 2, 3, 4, at least 4 of them now that are stacked up that we have not got. So when the government does reopen, we're going to have a bunch of data. Now, on Friday, we are actually going to get the CPI report. The BLS says we will get that because the cost of living adjustment from Social Security. So I guess that's the excuse why we're going to get this. I'm sure since the government is putting out these numbers, they're going to look pretty good, right? Okay. Just my expectation, if these numbers were going to look bad, Trump would probably say, yeah, don't put out these numbers, okay? Wouldn't have to. Government shutdown. Now, core month over month is expected at 0.3%, unchanged from last month. Core year over year expected at 3.1%, unchanged from last month. Headline month over month expected at 0.4%, unchanged from last month. and inflation rate year over year on the headline expected at 3.1%. That's actually up from last month's 2.9%. So you're expecting a pretty status quo CPI report. You're not expecting much of a change. And considering that, again, what I just said, you probably have room to come in lower on CPI. Now, S&P Global Composite PMIs will be coming out. Manufacturing PMIs and services PMIs will be coming out. Again, since we don't have a lot of economic data in recent weeks, that's something Wall Street's going to pay a lot of attention to. Now, we will get the Michigan Consumer Sentiment final numbers for October, 5-year inflation expectations, consumer expectations, and current conditions, as well as 1-year ahead inflation expectations that will be coming out on Friday. So, again, if you had to pinpoint a day, Friday's the big day as far as economic data, but really, again, throughout the week, as far as earnings are concerned, besides Monday and after hours, that could be a little important, but Monday, tomorrow morning, not going to be that important, but basically every other day, Monday and after hours, Tuesday, Wednesday, and Thursday are going to be important from a broader market perspective because of these earnings. Now, again, as I already showed as well, if you truly like to buy stocks when people are fearful, like people are fearful right now, people are bearish right now, could markets fall further? Sure. If tariffs go into effect on China or the government shutdown leads to larger fears of a recession or something like that, you could see more downside in markets. But people are pretty fearful. They're washed out. Sentiment's pretty washed out. And certain areas, again, like AI, are pretty washed out as well at this point. And I think the risk reward does favor the upside at this point because the long-term thesis for 2026, like inflation coming down, multiple Fed cuts, broadly clarity on trade deals, none of that has changed. The economy getting better, consumer getting better, no tax on tips, no tax on overtime, tax changes in the big beautiful bill, okay? Real estate starting to move again and people able to sell their homes. Like, none of that has changed. Same thesis. Earnings are strong. I think they're going to come in good this quarter, even though we have higher expectations than previous quarters. So when you put all of it together, you're looking at a pretty, bullish backdrop for markets. And I don't think it's changed. So, you can also see on the S&P, the RSI did hit the lowest level you've seen since we were in that crash back in, April, right? The 20% crash. The RSI hit 42 on the S&P, which it's back up to 53. You're basically at a neutral level on the RSI, but hitting that low at 42, that's when other periods of selling in markets have, ended, right? You get a shot lower in the VIX, and then stocks recover from there. So, that is it, ladies and gentlemen. Let me know your thoughts on this down below in the comment section. If you guys want to come trade with us live in real time, check out that link down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.